Hello and welcome everybody to Crypto Rosetta. My name is Savage and today we're going to be having a look at Ethereum. Before we jump into the price action, I just want to say thank you for watching. If you're enjoying the content, please smash the like button, hit that subscribe button if you haven't already, turn on those bell notifications so you never miss a video, and leave us some feedback down below. Also in the description you'll find a link to Discord. Come check it out, it's free to join. Okay, so let's get into the fun stuff. So I want to talk about some of the possibilities of the things we were looking at yesterday. We're talking about the possibility that we have moved up into the 0.618 zone of this A wave. So we are looking out for that possibility of a truncation here, or just a shorter A wave here. It has met that minimum requirement. Sorry, a C wave. Basically, the one-to-one was up here, this 22,118. So we're going to be discussing, this can always evolve into something else. So we're going to be going over a couple of those possibilities we touched on yesterday. So we were actually looking for that possibility to come back down here, and I am still anticipating potentially we could see another leg to the downside, potentially into this channel here, which could look to bring us around this zone of the 1690 sort of area. So it'd be an interesting area as well. It'd be retesting some of these previous highs that we had here. So I'll be keeping an eye out on those levels as we move to the downside. So within this, I'm going to just go through some of the things we talked about yesterday. We're looking at that possibility within here that, we could have completed this as a wave one into here, and we still had a corrective flat within here. This does fit still. The problem is that I have here is if we are looking at this possibility of this being the B wave, we'd have to say that wave two was a flat and was quite high as well. So, this is still possible to play out, but the thing is within this structure that we have here, if we do form this as a five-wave move, what I want to see is a move down towards this 1669 area, and then basically to see whether we get an additional fourth wave here. The problem we have here is that because of the fact that this wave one, if we're counting it in this way, would be very close to this wave three. So effectively, what that means is this fourth wave wouldn't really have a lot of space to play out. So within that, what I'm looking out for is basically still keeping an eye on this area here, which is, if I just slide this over a little bit, this 1669, which would be that one-to-one of this is an A wave here. So the problem as well is, if we do start to move this B wave over and say that we've completed here, it becomes quite disproportionate. This is already stretching it a little bit, saying this is an A, B, and looking for the potential of a C. The key thing here is what we would want to see if this is a bigger flat in here, what we'd want to see is once this five-wave move completes, we want to see this break back above these highs. If it fails to do so and we get a three-wave move up, something like this, potentially what we could then get is continuation to the downside, and it would make it less likely that this is actually what's going on within the structure. So I'm still keeping an eye on this. If we do look to start to break down deeper, potentially we could look to come back down towards this 1583 to this 1456 range, and that would be looking at this potentially has completed there, and then there's just a bigger corrective mess. The problem is, once again, we wouldn't want it to get too much bigger. This is going to be a key area in my opinion. If we do come down here, this previous A wave here at this 1611 area, that would be bringing us right back into this consolidation area here. So keep an eye on those levels. So within this, basically, what I'm looking for is, I don't know why it's over here now. Just select this. Let's slide this bad boy over here. So what I'm looking for in the short term is to see whether we actually have this reject to the downside again here. You can see that this is a previous channel we had drawn here, and I'm looking at this potentially as a 1, 2, 3, looking for this as a fourth, then seeing if we get an additional fifth wave to the downside. So if we do break down, basically what I'd be looking for would be the 1697 to the 1677 area, and looking for that to do so in a five-wave move. From there, we'll have to see what happens. If we fail to actually move back above this 1835, there is a potential that we have a more bearish situation going on here, where we could actually form a wave 1, 2, and then we look to break down. So we will discuss that. But in the short term, this is what I want to see. I want to see if we do actually move back above this wave 1 at the 1774. If we do move above that point, it would invalidate this fifth wave to the downside, and we'd have to treat this just as a three-wave move. If that was the case, basically, we talked about it yesterday, that possibility of this being a W, an X, and a Y, and we have actually come down to that zone of that 121. So we need to keep an eye on this. This could look to actually start to progress up from this point if we do maintain this low. So what I'd be looking for if we are looking to maintain it is basically keeping that low, potentially coming back down and retesting some of these smaller areas here. If we're looking at this, let me just throw this zone here of this 1720 to the 1734, and then looking for that possibility, we could see some extension to the upside from here. But really, until we do, we're right in that fourth wave rejection area, and the market doesn't seem like it is very decisive at this point. It's just grinding up against this channel here. So if we do start to break down, potentially this would be that first zone that I would be looking for. If we do move down past 1690, 1669, basically I would be looking out for that possibility of having an additional fourth and a fifth wave to the downside. And then depending on how exactly that forms. So the problem we have here is, even within this structure, what we have to be careful of is we don't have further extension. This could become a 1-2. This could become another 1-2, and then we look to break down. So really, until we start to take these highs, we need to be aware that there is that possibility of continuation to the downside. But once we start to take out this wave one here, that invalidates the straight impulse count here. But we'd still have to be a little bit cautious. And like I said, once we complete this, if we do move up in a three-wave move, watch out. Potentially, we could actually look to sell off from that point. So what I'm looking for here is a couple of things. So this is the alternative way we were counting it. We're looking at this instead of being that a 1-2 and a 1 and a 2. So this is still viable. We were looking at this potentially. So the thing with this move is we were looking actually from this point here to potentially break to the upside, but that is no longer valid because we actually took this low. So I'm just going to delete these off the chart for now. Just remove all these big levels here. Yeah, okay. So what we do have here is the possibility we could still look to break to the upside here. So the key support zone here, I need to remove some of these things. There we go. So the key support zone here would be the 1717 to the 1655. Holding this zone is key. If we fail to hold this zone and we start to lose this 1655 area, it becomes more likely we're actually going to look to break down and lose this low. If we do lose this low at the 1611, basically that would then invalidate this potential of extension up here, and we wouldn't be looking for this possibility anymore. So the way that this would have to form, if we are looking at it as a five-way move here, if we did move down, say into the 618, which would be the 1691 here, we'd actually have to move up past this zone here of this 20,000, sorry, 2095 range for this third wave. We'd then look for that potential of a fourth wave down and then look for that continuation up, potentially up into this range of this 2217 to this 2151 range. So this is still possible, until we start to take out these lows. We need to be aware we could see some extension up here where this becomes an A, a B, and a C. Or alternatively, we could already start this move directly up here if we look at this move rather as a W, an X, and a Y. So if we do move above these highs, that would pretty much confirm the fact that this has just been a three-wave move here, in which case this WXY pattern works out. And then we could actually be looking to push to the upside from that point. So keep an eye on it. Um, if we do if we do not hold that zone, basically, so oh yeah, this is what we were talking about yesterday, that possibility of that WX and that Y. So we actually came down to that 1, 2, 3, 6, and now we started to move away. So it's going to be key here if we develop this fourth and a fifth here. If we do, instead of looking at this basically as a WXY, we'd look at this as a ABC pattern. But we need to be cautious because if we do start to break down deeper here, we need to get back above these highs. If we just get three-way structure, potentially back into this channel, for instance, that could signal that we're going to see a bigger sell-off to the downside here. So this is going to be a key area. If we do get a five-wave move down for that fifth wave, watch the retracement. If it fails to get back above these highs, we could be looking for that continuation to the downside, maybe bouncing off some of these key areas here that we have, and then looking to actually progress down. So let me just change over to the next one. The thing we need to be careful of is like we were talking about in the previous video, basically that factor we could be within a bigger ABC pattern to the downside, which that target could bring us back down into this range of this 1669 to this 1192. So this is still possible as a flat here, just because of the strangeness of the structure up the top end. It's not my favorite interpretation. It is pretty clear as a five-wave move, but because of we just got to give it time to confirm. So the way that we want to see this confirm is that either this is a 1-2 and a 1-2, and then we start to break up, or alternatively, this is a 1, we come back for a 2, and then we look to push up from there. So that's going to be the key zones. And if I just throw this on here, that key support zone would be this 1587 to this 1458. Starting to lose this 1458, we start to jeopardize the integrity of the structure here. And then we could actually look to break down for this C wave and actually look to come back down into this zone of this 1369 to this 1192 area. That's going to be our sort of line in the sand. Once we start to lose that lower zone of this 1192, it starts to become less likely. But I'm still keeping an eye on this. If we do start to break down here, we did come up to that 1382, so it is possible, we could start to see a five-wave structure to the downside here. Um, some potential targets for that, if we do break down, could be towards this. Let me just change this out. Towards this 1364 to this 1243. So that would be if it is an expanding flat, and that would be where we'd be looking for if we are looking at this as an expanding flat to the downside. Potentially, we could see a move into this area. However, we'd have to keep an eye on this one-to-one as well here at this 1444. That would be one-to-one of this A wave, and that would be potentially looking for this. If we get a five-wave move down like this could become a running flat, and then we look to push it to the upside. So this is going to be the key thing here, is sort of how this breaks down and whether we maintain these key levels of support, and then look to actually move to the upside here. The alternative count we had is still valid. Looking at this as a 4 and a 5, in which case we'd have to be cautious because, we would be looking at that possibility. And we talked about this 0.618 of that wave 1 to 3, which we did come up into just. So we need to just see if this does break down deeper. Potentially we could see this play out as a bigger corrective move, looking to come back down here. So the idea within this is looking for that possibility. We could form something like this as an a B, and a C, and still actually come back down and retest some of these key areas one more time before looking to actually push to the upside here. So this is going to be key. This 1208 region, if we're looking at this as an entire move up, is going to be key if we're looking for continuation. Failing to hold that 1208 will mean that we are potentially looking for lower lows here, either towards the 723 to this 523 range, or alternatively lower down towards this 400 if it is a B and a C pattern to the downside. So both of these are pretty bearish. We need to be just aware that we could see this break to the upside here, but we still haven't invalidated those those bearish counts. So pretty much in a nutshell, we need to be careful. And this would be looking for something like the possibility of breaking down out of here. And what we'd want to be keeping an eye on is, for as long as we maintain these lower highs, potentially we could see something like this as a 1, 2, 3, 4, 5 into this zone here. We come back up for wave 2, potentially face rejection again between this 1800 to this 1760 area, and then look to break down in a bigger five-wave structure towards this 1555 range, and then look for a fourth and a fifth, and then another fourth and a fifth, which could look to bring us right down into the channel here towards this 1501 to this 1461. So if I throw these key supports on, we can see that that would basically bring us down into the 786. The problem is if we do get a five-wave move like this, what it would be indicating to me is that, this is potentially an A wave we're going to get a B wave, and then we're going to get another C wave. And that could then look to come back and challenge some of these areas like this 1320 at this 618 and this 1297. So we just need to be aware that there is still potential for some bigger sell-off here. And we also, once we get down there, we need to be aware of the fact that it could actually still turn around and then start a bullish move to the upside. So it's going to be key if we are looking at this these structures that we watch how we react around these levels. So that's the breakdown. But basically, as long as we hold this yellow support box here, potentially this move can still look to move away to the upside, and basically look to form a more bullish structure. Alternatively, if we do lose this 1657 and we lose this low, the next place I'd be looking for support would be this 1587 range to this 1458. If we lose that 1458, it becomes more probable we're going to actually challenge these lows at this 1368 range. And then basically what I'd be looking for is that possibility that, we might be looking to move down towards this 1320 to this 1297 range. And then basically once you start to lose this 1206, you can see it's quite an important area as well here. Once we start to lose this, potentially that could mean we're going to look to actually form another low here and look to push down deeper within this structure. Okay, so I'm going to leave the video there. I hope you found it useful. If you did, please smash that like button. Hit that subscribe button if you haven't already. Turn on those bell notifications so you never miss a video, and leave us some feedback down below. Also in the description, you'll find a link to Discord. Come check it out. It's free to join. As well as that, you'll find affiliate links for both PrimeXBT and BYBIT down there. Both great exchanges that we use on a regular basis. Check them out for yourself. If you do not have an account, using the affiliate link does help support the channel, and we do appreciate it. Everyone, have a great day, and we'll see you in the next one.